Hey Carla, you have been working at this accounting firm for 6 years and not one time have you submitted your documents on time. Carla, I need the statement of financial position to submit to the CEO.
Then I want name, so sir. What kind of big word you use for me?
It's the same thing we call balance sheet, Carla. Come on, man, move with the times, right? Balance sheet, statement of financial position, same thing.
Oh, that name, sir. Thank you for telling me, sir. I go prepare it right now.
Prepare right now? You should have done that already. Jano Star.
Hey guys, welcome to another episode of Everything Business. If it is your first time, first I want to tell you thanks for subscribing and thank you for tuning in. I hope that this lesson would be informative to you. If you are always coming, then thank you for keep supporting, man. The support really helps, right? Today we're going to be talking about balance sheet, or as it is called, statement of financial position. All right. If you did not see my last video, which is the income statement, then you may want to go and check out the income statement before you view this lesson or this tutorial. Alright, so let's get right into it. So then, what is a balance sheet? So a balance sheet is a financial statement that shows the financial position of an organization. The balance sheet is also called a statement of financial position. It is the new name that is being used, so you can look out for that name. The balance sheet shows the assets, capital, and liabilities of the firm. In other words, the balance sheet basically shows the accounting equation, which is assets equal capital plus liabilities, right? And if you need more information on the accounting equation, you can check out my tutorial on introduction to accounting. All right, the link for that will be placed in the description below. So let's look at the format for the balance sheet. So this is how the format will look. I want you to realize that we have 4 headings in a regular balance sheet, right? We have 4 headings. We have 3 columns for a simple balance sheet format like this. This is a simple balance sheet format. We would only need to use 2 columns, right? But as we get deeper or more complex in balance sheet, then we are going to need a 3rd column. So I just put 3 columns there. So we have 4 headings: fixed assets, current assets, less current liabilities, and financed by. Right? The headings basically tells you what is included in each section. So for fixed assets, we would put fixed assets. All right. Now, the fixed assets are placed in a specific order, or they should be placed in a specific order, and that order is what we call the order of permanence, right? So the fixed assets should be ordered from most permanent to least permanent. So you look at premises there. Premises will be first because it is obviously the most permanent. Then you have fixtures, then you have motor vehicles, right? So you add up all of your fixed assets and you get this figure here, which is the total fixed assets. Then you move on to the next heading, current assets. So current assets are the assets that are in the business for a short period of time, right? And they also follow a specific order, right? It is the order of liquidity. So you would list your current assets in the order of liquidity from the least liquid to the most liquid. When we talk about liquid, we're talking about how easy an asset is to convert to cash, right? So for the current assets section here, you'll realize that we have closing stock or closing inventory first, then we have debtors, then we have bank and cash. So this is normally the format, how you would set it out in the order. So you add up all of them, right? The current assets, and you get this figure here. So the current assets is always placed in the middle column. All right, so even when we're using 3 columns, it is going to be right here, just the same. And then now we move on to less current liabilities, right? In this section, you list your current liabilities. And one of the main one is creditors, right? So you normally put your creditors there, or accounts payable, as it is called. All right, you put it here. All right. You can, or you may have loan. So if you have loan, then you would need to put the the creditors and the loan in this first column and do the addition and put the final figure here. So you subtract your current liabilities from your current assets and you get this figure right here that is called working capital. So then what is working capital? Working capital is basically the money that is used in the business on a day-to-day basis. So I realize that they like to ask on the multiple choice paper, right, for the formula for working capital. So basically the formula for working capital would be working capital equal current assets minus current liabilities. All right, I want you to pay attention to that. And then now you would add your working capital to your total fixed assets, and then you would get this figure here. Now this figure basically, it has a name, but people don't normally use the name. It is called total net fixed assets, right? And remember that I tell you that anything that you hear net on, right, it means that that figure has been adjusted. So when you add the working capital to your total fixed asset, then you get this figure right here, the first double line figure, which is called total net fixed assets. You could also call this figure here the closing capital. This double line figure here, the closing capital, and I'll explain to you why it is in red in a few minutes. So then you move on to the last heading in the balance sheet or the statement of financial position, which is financed by. This heading basically tells you how the business has been financed. All right, so it's financed by capital. So you would pick up capital from the trial balance, right, and you put it there. You would add net profit. Now the net profit is the same net profit that you would have gotten from working your income statement. So you add a net profit to it, you get this figure here, and then you less drawings. Drawings would be in the trial balance that you would just pick up again, right? And you subtract your drawings from this figure, right? And you would get these figure down here. It is in red, right? Just like this figure here, because they are the same figure. They are supposed to be the same figure, and that indicates that your balance sheet is correct. It is balanced. That's why it's called a balance sheet, right? It shows the accounting equation. Balance sheet is very easy. Easy to do because most of these assets, if not all of them, you will of these items rather, you will pick up from the trial balance. So you're just picking up the items, putting them down, and you're adding, subtracting. So once you can add and subtract and you have the ability to look at something, then you should be able to do well in the balance sheet. So let's look at a practical example now. Right, so this is the example that we had done from the income statement, K nameless, right, from the income statement tutorial. So if you have not seen the income statement tutorial, then you need to go back and look at it. So this is the trial balance. Now you would remember that there are some items that were in the trial balance that I told you that we would not be using because they are to be used in the balance sheet. So this is where it comes in now, right? So let's look at the balance sheet here, right? So we start with our fixed assets, as said before, right? We have two fixed assets in the trial balance. We have buildings, right? And we also have fixtures, right? Now I want you to note that the fixed assets don't have to appear at the same place in the trial balance. So the buildings is there and then the fixtures is down here, right? So you put buildings first because building is more permanent, and you have to remember the order of permanence. So you put buildings first, alright, and then you put fixtures there, 2,850. You add both of them, you get 22,850 because there are no other fixed assets in this trial balance. Then you move on to your current assets, and the current assets section is pretty straightforward because it really never changes, right? So once you have these items in the trial balance, then you would make up the current asset section. So you have closing stock or closing inventory, which is located outside of the trial balance, 22,390. You put it there. Then you have accounts receivable or the debtors, right? 14,320. There is accounts receivable, 14,320. Then you have cash at the bank, which is 2,970. Put it there, 2,970. Then you have cash in hand, 115. There is the 115. You add all of these current assets, you get 39,795. So far, so good. Pretty straightforward. Moving on to the next heading now, which is less current liabilities. And this is what I was talking about earlier. Now, in the format, I only gave you one current liability. And when you have only one current liability, you can just put it in the second column here and do the subtraction. But now we have two current liabilities. We have a loan from C lender and we have creditors or accounts payable. So we are going to put them in the first column here. We are going to add them, right? We get 18,160 Then now we are going to subtract this amount, 18,160, from the 39,795 to get the working capital, which is 21,635. All right. Now we are going to add our working capital to our total fixed assets. Sorry, and we get the total net fixed assets figure, right, which is 44,485. Sometimes I like to call it the first double line figure. Then we move on to the last heading, which is financed by, and we have capital, right? See capital there, 40,888. There it is, 40,888. Then we add the net profit, right, which was 11,217. Remember, the net profit would not be in the trial balance; it would be in the income statement that we did, that I did in the last tutorial. So you can just check out that video, and you will see where we got the 11,217 dollars from. So you add it, you get 52,105, and then now you're going to subtract your drawings. Here is the drawings, 7,620. You subtract it and you get 44,485, which is the same as this figure up here. You can call it the closing capital if you will. You can call it the total net fixed assets. But the thing is, these two double line figures must be the same for your balance sheet to be correct. And so they are the same, therefore the balance sheet is correct. Alright, so let's review. So a balance sheet is basically a financial statement that shows the financial position of an organization. The balance sheet shows the assets, capital, and liabilities of the firm. In other words, the balance sheet shows the accounting equation, which is assets equal capital plus liabilities. Alright, so here is a practice, right? You would have seen this question in the last tutorial on income statement. So now I want you to do the balance sheet or extract the balance sheet, right? Prepare the balance sheet from the trial balance and leave your answer in the comment section below. I would really like to see your process, see what you got. You can leave a picture in the comment section below, right? And yeah, that's good, right? So thank you for viewing. Please remember to like, subscribe, and share. Hit that notification bell so that you never miss a tutorial. Alright, God bless.